Hi guys, so this exam question has been adapted from the 2014 exam question and it relates to disposal of non-current asset. So as we are working through this question, I want you to take note of how I highlight key information and how I write notes on the side as well to prompt my thinking as I'm trying to find the solutions to the question. So on 31st of December 2015, the nursery's computer system was reported in the balance sheet. So here I'm given an extract as at the 31st of December 2015. Here I'm given the cost of the computer system, $30,000, and that basically is the historical cost. It's what the computer systems were purchased for. Now, it is very important to note that within this 30,000 here, it does not necessarily mean that we only have one computer system. It may mean that we have multiple computer systems within this figure. Okay, so I'm just going to note that for us, may have more than one computer system. Now be very, very careful with that. Here I'm given the accumulated depreciation, and with that, this 14,000 therefore represents the carrying value of the computer systems as at 31st of December 2015. Now I'm just going to write this on the side here just to prompt myself, and you can even see from this balance sheet extract, historical cost minus the accumulated depreciation will give us the carrying value. Okay, moving on. On the 1st of January 2016, part of the computer system, which means only some or one part of the computer system has been sold, not all of it, okay? Part of the computer system that had originally been purchased for 5,000 plus GST. So when I see the word purchase, that's my historical cost, and it was purchased on the 1st of July 2014, and that asset was sold. So here, buy, and this is when I sell. So which means I have used my asset from the 1st of July 2014, buy, and I've used it all the way to 1st of January 2016. Now I want you all to count this number of months very carefully, because I know some of you do get a bit confused as to how many months this has been used. If this helps, you might like to break it down by years. So from the 1st of July 2014, I find it easiest if I just bring it all the way to 31st of December 2014. And if you count the number of months, July, August, September, October, November, December, that's 6 months here. Okay? And then we have the 1st of January 2015. So that's just the next date, New Year's date. And that's all the way to 31st of December 2015. Now that's another 12 months. Now I would like you to note that I actually sold the asset on the 1st of January 2016, which is just after the day just after 31st of December. So it's reasonable enough to calculate the number of months up to this date, up to 31st of December. Okay, try not to get confused with that. If you do find it confusing, I suggest that you break down the dates as I've done here. So as we can see here, that's a total of 18 months. Okay, moving on. I have sold the asset and I've received $3,000 cash. So here, this tells me that it is a cash disposal, and when I record it later, I will need to try and recall the steps for a cash disposal. Now, on the 1st of April 2016, I bought a new computer, was purchased for $4,000. Now, it seems like we've got two different transactions here. One is for disposal of an old computer system, and here we have a purchase of a new computer system. Okay, so keep that in mind. Again, it sounds like it's purchased somewhere in the middle of the year. Possibly, I might need to consider the number of months that it's been used. Okay, so do like number of months used. The computer system is depreciated 30% per annum on cost. So when I see the word cost there, it's the same thing as saying 30% multiplied by the historical cost. And as we calculate depreciation, I always ask you guys to make sure that you put the fraction symbol in there just to prompt us in the event that we need to calculate the depreciation for time period that is not exactly 1 year. Now looking at this formula, some of us may be able to link this to the concept of straight line depreciation. Okay, question A, calculate the accumulated depreciation on the part of the computer system that was sold. So only the computer system that was sold. So we've already got all the information there. I'm just highlighting key information so that when I'm working on the solutions later, I've already given thought to this. Now question B, calculate the depreciation expense for the computer systems for the year ended. So now this, I'm just going to write here all. So depreciation for all, whereas this is depreciation for only part of the system that was sold. Okay. And the last one here, show how the following accounts will appear in the general ledger after all the entries have been posted for the year ended. So I am expected to complete 3 ledger accounts: computer system, accumulated depreciation of computer system, and disposal. Okay, and it says here for the year ended, all the entries have been posted for the year ended. So which means I want to know what happens from within the period 1st of January 2016 all the way to 31st of December 2016, 1 full year. Not required to balance, so just note that. Explain why a profit. Now these are some theory questions. I'm not going to address these questions in this video itself. I'm just going to be focusing on the entries for the disposal, but certainly do keep in mind and think about these questions here. Okay, now that we have extracted the key information, we're going to try and work out the solutions to the questions. So question A, we are calculating the accumulated depreciation on the part of the computer system sold. So remember, only the part of the computer system that was sold on the 1st of January 2016. So when we are calculating depreciation, we have already been given the formula there, which is 30% multiplied by the costs. And we put the fraction symbol in there just to prompt us to think if perhaps we are calculating for a certain number of months instead of 1 year only. So here, remember, it's for the part of the computer system that was sold, and we've been told here that it had a historical cost of $5,000. We've also worked out that it was purchased on the 1st of July 2014, and it was sold, used all the way to 31st of December 2015. That's just the day before it was sold on 1st of January 2016. So we've worked out that's a whole 18 months that the asset has been used, and that would be the number of months that we're using to calculate the accumulated depreciation up to the date it was sold. So here we just calculate taking 30% multiplied by the historical costs and multiplied by 18 months out of 12 months. That's that. Moving on to question B, we are now calculating the depreciation expense for the computer systems for the year ended 31st of December. So this is for all the computer systems, not just one part, not just the new one, but all the computer systems. Now, some of you may have remembered that we bought a new computer system, and that would probably be the first one that you think of in terms of calculating the depreciation expense. And that's absolutely okay, because that's actually giving you 1 mark already. So the new computer system, it was purchased for $4,000. And it says here that we bought it on the 1st of April 2016. So here we are actually calculating the depreciation for the full year up to 31st of December 2016. And we can see here from April to 31st of December. Again, be very careful. It says here 1st of April. So the whole month of April needs to be included. Now that will be equivalent to 9 months. When you're calculating a depreciation for this, you will therefore take 30% multiplied by the cost of $4,000 multiplied by 9 months out of 12. Now, if you've done this first part, you're actually getting 1 mark already because you did calculate the depreciation for the new computer system. So you can notice here that's 2 marks. Now the other mark comes from remembering to calculate the depreciation on the existing computer systems that we have left. So I'll just use the word old computer system. So now this is the one where you have to think very carefully, and I'm going to work through this with you. So on the 1st of January 2016, it says that I had computer systems totaling to 30,000 historical cost. Now, but you have to remember as well that I did actually sell one of the computer systems, and that computer system had a historical cost of $5,000. So that was the one that was sold on the 1st of January. So which means the balance of my old computer system had a historical cost of $25,000. And with that, I can now calculate the depreciation of 30% on that historical cost of $25,000, the balance of the old computer systems. Now we have to think about it. This is from 1st of January to the 31st of December. So that's 12 full months that we are depreciating this asset. And then we'll get another calculation of depreciation here. And what we need to do is just basically add up what we've gotten from the new computer system and the old computer system. Just add them together, the depreciation that you've calculated, and that will give you the total depreciation. Okay, so keep that in mind. Okay, so question C requires us to show how the following ledger accounts will look after all the entries have been posted for the year ended 31st of December. So we are given the computer system, which is an asset account, the accumulated depreciation, which is a negative asset, and disposal of computer system, which is a clearing account. And remember how I always use the word, this is like the bin account. We're just throwing out the old asset into this account, and we can work out profit or loss from the disposal using this account here. Okay, so computer system asset account, we are required to show how it looks like if all entries have been posted. So everything that's given to us, which means we also need to include the opening balance of the computer systems that we had at the start. So on the 1st of January 2016, that is our opening balance. Now some of you might be wondering, oh hang on miss, that says 31st of December 2015. Well, if that's the closing balance on the 31st of December 2015, the next day, Happy New Year, 1st of January 2016, that's our opening balance, okay? $30,000. We do the same thing for the accumulated depreciation. It says that we had a balance of $16,000 at the start. Because it is a negative asset account, our opening balance will be on the credit side. And that's an accumulated depreciation of $16,000. Now, the next thing that we need to do, because this relates to a disposal, and of course a couple of other transactions there, but let us deal with the disposal first. We're going to have to put the disposal entries through. So thinking back about the steps that we follow through, we ask ourselves, is there any additional depreciation to calculate up to the date of disposal? In this case, no, because remember in question A, we've already calculated the accumulated depreciation up to the date that it was sold. Okay, so we do not need to add any more accumulated depreciation for 1 or 2 months or whatever that is. Okay, so no more, we've already got that number. And the next step would be, okay, based on what we have learned, we are now transferring the costs of the computer system that we are selling to the disposal account. Okay, so which means we are taking it out of the computer system and putting it to the disposal account. So remember, based on the information that we had, the asset that was sold, it had a historical cost of $5,000. The accumulated depreciation, as I said, was already calculated in question A. So please look at what you've calculated from there. And that basically is the two important information that we need to transfer into the disposal of computer system account. So we are transferring the cost from here, and we have a cost of $5,000 credit to this account, and therefore debit the disposal account, because that's where we are throwing our old system to the bin here. What's the cross reference? It's where we have recorded the other side. Okay, so here we have disposal of computer system. Now the disposal happened on the 1st of January, so that's the date that I'm going to put in there. And here, 1st of January 2016, what's my other side? I took this from computer system. Okay, so remember, the next step is to transfer the accumulated depreciation balance of the asset that I have sold. So if I'm taking the accumulated depreciation out, I will need to debit this account. And again, I am throwing all that to the disposal account. That's on the first. That's on the first. The cross-reference is basically what is the other side. So in this account here, this is the accumulated depreciation. My credit side is in the disposal of computer system account. And this one here will be the accumulated. Now, just a little note of advice here. Usually, abbreviations are discouraged. You should not abbreviate your accounts at all in the question, because you'll be given plenty of space. The only exception is sometimes when we have really long account names such as this, we can use abbreviations which look something like this: accumulated ACC dot depreciation DEP of computer system. Okay, but if you find that you can squeeze all the words in a box, please do so, just to be safe. Otherwise, like I said, in the exceptional cases where you have really long account names, it is okay and acceptable to abbreviate. Okay, I'm not going to put this number here because that will be me giving you the answers. So I want you to basically put that in, and that's me transferring the costs and the accumulated depreciation nicely to the disposal of computer system account. Now, we need to remember the next step. When we are disposing a non-current asset, we are also getting something for it. In this case here, we are getting cash disposal. So please look through, do some revision as to how you should be recording cash disposal. And you would note that we need to record our cash disposal, our cash proceeds, which is 3,000 in this account here. Okay, so like I said, for some of you who may like to have a bit of a visual with what's happening with the bank, because we're not given a bank ledger account, but by all means feel free to draw one on the side so that it prompts you to think. If I'm selling an asset, I will be debiting the bank because I'm receiving money, and therefore I will be debiting the bank $3,000, and which means I will be crediting the disposal of computer system account for $3,000. Now I'm just giving little hints for you here and there, but you should be able to fill in these blanks as you're working through this. Now once that is done, Remember, I told you that this account is where we can determine if we have made a profit or a loss on disposal. And what I want you to notice is this. For some of you who are unfamiliar, you can work out that that's your historical cost, and that's your accumulated depreciation in here, and that too basically gives you the carrying value, or basically what's the value left of your asset that you are selling. That's the carrying value, and if you're comparing it to the amount of money that you're receiving for the asset that you have sold, you can see whether you've made a profit or a loss. Okay, I want you to go through the steps again. If you are making a profit, I want you to see how you should be completing this account and what the cross-reference should be if there is a profit or a loss on disposal. Now, that is just recording the disposal, and I'll actually stop here for now, and then in the next slide you will see the other transactions that I need to record in this ledger account as well. Okay, so this is a continuation to question C. I've already put through all the disposal entries earlier. Now I mustn't forget all the other information that we might have been given in the question. So I'm happy up to this point I've done my disposal, but I have not yet recorded the purchase of my new computer system, and that's on the 1st of April. So if that's a purchase, that means I have to add to the computer system account, and that would be on the debit side, and that would be here of 1st of April 2016. Now at this point, if you're unsure what I should be writing in a cross-reference, or even what the amount would be, this is where I would encourage you to actually use the general journal just to do the workings. And what I mean is this. I'm just going to make some space here for us. So just for this one here, okay, I'm buying a new computer system. So which means I have a computer system account, which is what I have here. I also have GST clearing, and I also have bank because it says here that I've purchased it for cash. So, and I'll work through the debits and credits using the general journal. In this case here, my computer system was $4,000, and it says that I plus GST 400, and therefore my total paid out of the bank would be $4,400. Now going back to our ledger account, we can see that we are debiting $4,000. Therefore on the debit side, $4,000. What's my cross-reference? It's what's on my other side, what's on the credit side, and that says bank. So when I look at this ledger account, it basically says that I have spent money from my bank to buy a new computer system worth $4,000. So that's recording the computer system, the purchase of the computer system on the 1st of April 2016. Now, I'm going to record a third part to completing question C, and that will be for the depreciation expense for the year. Okay, so this is the last part for question C, and that's to record the depreciation expense. As some of you would have remembered, we have worked out the depreciation expense in question B. Okay, so that was the depreciation expense for all the systems, and that's for the whole year. For the year ended 31st of December 2016. Now at this stage, I hope that you guys have remembered that the depreciation expense entries would be debit depreciation expense and credit accumulated depreciation. So if you were to work out the general journals, you would debit depreciation expense because that's an expense, and we credit accumulated depreciation. As to what the number is, you should be looking at what you have calculated in question B, and you will record that in one of these ledger accounts here. So as you can see, we are not given the depreciation expense account, but we are given the accumulated depreciation account. And what we can see here is that we need to credit this account for the amount that we have calculated in question B, and that would be as at the 31st of December 2016. Now the cross-reference will simply be what's the other side, and this relates to a debit to the depreciation expense. So we'll have the account called depreciation of computer systems. Alright, and that's it for questions A to C. Hopefully that helps. This next question has been adapted from the 2018 exam. And this is quite a big question, but the part that I'll be focusing on is just the disposal of a non-current asset. Particularly, it's a trade-in. Okay, so there will be some information here that we'll be ignoring for today, just for this video. Okay, so DC Computing sells computer products for cash and on credit. All inventory is marked up by 100% on cost, so that's irrelevant information for now, because we're just focusing on trade-in. The business reports on a monthly basis. The balance sheet as at 31st of August 2018 is provided below. So we're given the balance sheet as at 31st of August 2018. DC Computing has replaced its van with a new van. The old van was traded in for $10,000, so that is what we call the trade-in allowance, and that was traded in on the 30th of September 2018. The new van had a cost of $55,000 plus GST, and the balance was paid by cash after taking a loan of $50,000 from Eastpak Bank. So that's the key information. And so with that in mind, because we know we'll be working with some sort of a trade-in, we know that the costs of the van and the accumulated depreciation of the van will be very important as well. So we go back to the balance sheet. We can see here that we've got van cost. That's going to be our historical costs. And we've got our van's accumulated depreciation. That's going to be our van's carrying value. Now remember, this is all as at 31st of August. Let us firstly have a look at question A. It says here that we are calculating the depreciation on the old van for September 2018. So that is 1 month. And if you remember correctly, we are selling or trading in the old van on the 30th of September. And here we are given the balances as at 31st. So which means we have 1 month, and that's exactly, so sometimes the exam question will give you a bit of a guide like this, just to prompt you. We are calculating the depreciation for 1 month, and here we are told that the depreciation method is reducing balance at 40% per annum. When you see reducing balance, the first thing that you should be thinking of is the formula, which is the percentage multiplied by the carrying value and multiplied by the fraction, so the number of months that you're calculating this for. Now let's work on question A. Here, the depreciation, I've already used the formula, given the formula there. So this is what we call reducing balance, and that would be the percentage multiplied by carrying value multiplied by the number of months that applies. So in this case, it will be 40% multiplied. What is carrying value? And this is where I want you to remind yourselves, carrying value is what we call historical cost minus the accumulated depreciation. Where do we get the historical cost? Aha, balance sheet. So it says here, oh no, that just got erased. Question B. Prepare the general journal entries required to record the sale of the old van and purchase of the new van. We know that this is a trade-in already. Narrations are not required. Okay, so for this, we need to focus on the entries that relate to selling and purchasing the new van, which is the trade-in. But I would still like you to think through the steps that I've given you, which is the first step. You need to consider if there is an additional depreciation that we need to add before we process the disposal. In this case, yes, and we've already been given a hint with question A, because we are given the historical cost and the accumulated depreciation of the old van as at 31st of August. So I'm going to use this working space here to highlight some things for us. So the old van, we had, so this is on the 31st of August. The historical cost was 45,000, and we are told that the accumulated depreciation is 28,800. Now remember that we actually sold the asset on the 30th of September, which means we added one more month of depreciation, which we have calculated in question A. So even though they did not quite say you need to record the depreciation, it is still okay for you to follow through the steps so that you remember to take up the additional depreciation and include that in the accumulated depreciation. So it's okay to use this space and to add that in if you are unsure whether it needs to be included or not, because at the end of the day, it is still a step necessary to take prior to disposing of your old asset. So use your depreciation amounts that you've calculated in question A, and you record the depreciation expense here. So depreciation of van, and here we have accumulated depreciation of van. Okay, now obviously you guys can write a little bit neater than I am. I'm doing this electronically. So what would the entries be? It would be debit to the depreciation expense and credit to the accumulated depreciation. Now the number, see question A. Okay, and that you'll be able to get the amounts here. So that's depreciation for the 1 month, 30th of September, and now I follow through the steps to dispose my old van. So you remember by now we would need to firstly transfer out the cost of the van to the bin account, which is called the disposal of van account. Now what's the historical cost of the van that we are selling? It's $45,000. That would have been a debit, and to take the van out, we therefore credit the van account because we are transferring that amount to the disposal of van account. Then the next thing to transfer is the accumulated depreciation, of van, and again we are transferring that out to the disposal of van account. Because the accumulated depreciation would have been recorded on the credit side, to transfer it out we need to debit the accumulated depreciation account and credit the disposal of van account. So with these two entries here, you can basically see that I have dealt with my carrying value. I've transferred out the carrying value of my asset, my old van, into the disposal of van account. Now the next step is asking ourselves, once we've disposed the van, the old van, what are we getting? In this case, we are getting a new van, which means that something needs to be added to my van account. And this time we are going to use the trade-in allowance because that is basically what we are getting from selling the old van. We are getting a $10,000 trade-in allowance, which can be applied to buying my new van. So 10,000 to the van account, and the other side is the disposal of van account. Okay, you complete your entries here. So here already from from here we can work out if we made a profit or a loss on disposal. Okay, and that is where we record it in the next part. I want you to transfer the amount from the disposal of van, and I want you to think if we made a profit or a loss, and therefore we're going to transfer it out to the profit, or it might be a loss on disposal account. So you choose, depending on your calculations that you have presented there. Disposal of van. Okay, and the debits and credits would depend on whether it is a profit or a loss. I want you to think about that. Now, once I've dealt with that, I've already sold off my old van and I've already recorded the trade-in allowance that I'm getting for my new van. But what I haven't recorded is the purchase of my new van, which in this case here is 55,000 plus GST. And it also says that I've taken up a loan. So I'm going to use this working space here just to work this out. So this time, now obviously if I'm in an exam setting, I would only be using one writing tool, and that would be a pencil. I would not be switching and changing between different colors, just so you know. I'm just doing this so that you can see my workings and my entries clearly. So for my new van, my historical costs of my new van is $55,000. I have GST that I also need to account for, 5,500, because it says 55,000 plus GST. So that's 10%. And so now the total that I would have needed to pay is 60,500. So need to pay. Okay, that's if we're not trading in or anything. But however, we've already applied, we've got a trade-in allowance of trade-in allowance was $10,000. So which means I only need to pay $50,500 out of the bank. Okay, so with this information here, you can attempt the next journal entry depending on, and you can use a bit of logic to this. So I am paying for the balance of my new asset. There has to be bank. And because I am adding on to the cost of my new asset, that would be the van. And I also need to account for the GST on this purchase. So this is GST clearing. Now in this case here, I know that I need to complete 3 accounts, but if you're not sure which one to start off with, start with the one that's most logical to you. For me, I think it's quite logical to think about how much we need to pay off the bank account, because we've already worked that out here. We needed to pay $60,500, that's the total that we need to pay to the car salesman. But because of the $10,000 trade-in allowance we're getting for our old van, we therefore only need to pay $50,500 out of the bank. That's what I'll start with. The next one would be the GST, because we've clearly calculated in here already. And because this is a GST on purchase, we are going to debit the GST clearing account. So you put the number in there. And lastly, that leaves us with the van account. If we have something on the credit here and we've got something on the debit here, that will help us to understand or to calculate the amount that we need to add on to the van account. And I want you to think logically as well, because we are adding on to the cost of the new van. We therefore need to debit the van account. So that would be the entry to record the purchase. Now we mustn't forget as well that we are told that we have taken out a loan. And so therefore we need a separate journal entry to record the loan. So that would be bank and loan from Eastpac. Because we're going to receive that money from taking out a loan, we got to debit bank 50 for the amount of the loan that you are taking, and credit loan account because we are now recognizing this liability. So complete that entry. Just a side note here, if you're referring back to the entries for a trade-in, I do also encourage you to put in the entry to close the profit or loss on disposal of van account and close it to the profit and loss summary. Now, I'm just going to do this for now, and I'm going to explain to you the rationale to using the space below here. Okay, so let's just think about the profit or loss on disposal, and we're going to close it to the profit and loss summary account. Now it all depends, of course, on whether you have determined whether we made a profit or a loss on disposal. So if it was a profit, it would be a revenue, and therefore we'll close the revenue account accordingly. If you have determined that we have made a loss, we'll therefore close the loss account to the profit and loss summary accordingly. Now you might be asking me this question, oh miss, why are we writing it underneath here when we're not given the space for the general journal? And does that mean that we've made an error somewhere here, or what's actually happening? Now, the first thing that I'm going to tell you is this. In doubt, and if you feel like you do have to put in that extra entry, I would say just go ahead and do that, okay? Because what's going to happen is that is still considered an answer from you. Okay, and the thing is that sometimes for you guys, especially because you have memorized the steps in recording a trade-in, you would think about everything that needs to be included, and that helps you to systematically work through the solutions and get you the right figures. And that's absolutely okay if you end up with a couple of lines in addition here. Okay, what I mean is, in this case here, if you notice, the question specifically asks you to record only the sale of the old van and the purchase of the new van. It did not say anything about depreciation. But in this case here, we have recorded the depreciation because it is still part of the process of recognizing the depreciation up to date prior to selling. And this is the steps that I've taught you guys as well. And the very reason why I say it's important that you think about this step is so that you don't miss out on calculating the depreciation up to date. So in this case, that is why we are left with no more lines at the bottom here. But still, I think that it's quite important for us to close the entries. You would also notice here, for example, it did not specifically say that you have to close the profit or the loss to the profit and loss summary, but because I still see this as a very important aspect, to complete the whole cycle of recording the disposal, I think that it's still important for us to record it. And this is just like what I would say for insurance, just in case it is something that they're expecting us to do, and that comes under the 6 marks, and therefore we're gonna just cover all bases and make sure that we do everything that we need to do. Okay, because what I can tell you is that you're not going to be spending time during an exam thinking about, okay, this is 6 marks, how are they going to allocate these 6 marks? Okay, so for sure we know that the disposals will be counted in that 6 marks, but it's other things like this, such as the closing of the profit or loss on disposal, and perhaps the depreciation. We're not sure exactly which where they will be allocating the marks to. So the conclusion is, put in all the entries that you know are relevant to disposing from beginning all the way to the end, just to cover all bases.